Good evening and welcome to this session of the live learning classes conducted by the Board of Studies, Academics of the Institute of Chartered Accountants of India. In the last class, we understood the concept of prospectus, also private placement of shares, etc., etc. Now, today, yes, the topic designated for the day is share capital and debentures, no doubt. But before we start this topic, I would like to sort of discuss an assignment which is like a case study. Now today, I uploaded this case study onto the portal. It's a Word document. It contains a case study, a story, okay, with a lot of facts in it. Based on those facts, I have also set multiple choice questions, and some independent multiple choice questions are also there. What I thought was, I will go through them today with you, and you can also give me the answers, etc. So we have almost a lot of people here. So Ritik, Aisha, Ishan, Hera, Bhumika, Sudhanshu is here, Diksha, Darshan, of course, welcome, sir. And Rajni ji is here, welcome, madam. Komal is here, Gunapalli, Prasanna, Shankaran, welcome, sir. Iniyamale Vanakkam. And Mr. Logasundar, Sushil, Tejas, wow, Kavita, Manav, Mariam is here, Keshav Thakur, of course, welcome, sir. And Rushita Sharma are there. And Darshan asking if the chapter names and order given are in the same. Yes, absolutely. Institute, for reasons best known, has decided to give the same name as given for the chapter in the Bar Act. So this, the share capital and debentures, is chapter 4 in that order. Okay. Till we come to accounts and auditors, which is the last. So that's how it will be. I'm sorry, auditors, which will be the last. Audit and auditors, that will be the last. Right? Now, as I was telling you, I will now take it up this thing. Okay, Mr. Vishwanath Reddy, it's now evening, sir. I don't know if you're in this country, in India, then this is evening now. Right? Jaspreet ji, welcome. Farha, wow, Vishwanath Reddy, good evening. Chalo. Now, let's, without further ado and waste of time, let me start off. Go to that case study, right? In case you have been able to read it, good. Otherwise, allow me to quickly read it for you. Hope it is visible to you. So, concentrate on the words. Now, I don't know if you are going to have case study based questions, but you may have definitely questions that are problem oriented, meaning they'll give you a situation, some facts, and ask you to apply the law and decide whether what is happening is right, wrong, etc. So this is a bigger story. This is a story of a fictitious family I created just for the ICI classes. The Adekar Industries Limited. Adekar Industries Limited was founded by Mr. Vikram Adekar. Vikram Adekar is a brilliant man. See his career. Vikram Adekar was born in Pune, Maharashtra. He had a brilliant academic career. And after his post-graduation from IIT, okay, so he did his engineering from IIT. He joined a leading automobile manufacturing company and worked there for 10 years. Then, thereafter, he decided to start his own business. So, that was in 1996. Post-liberalization, he found automobile industry is growing. Therefore, he founded Adekar Industries, engaged in the manufacture of specialized automobile components. See, the beauty of case study is, there will be a lot of story there. You will have to read the story. This part of the case study has nothing to do with the questions. But if suggestion don't cut across, there might be something there that is relevant. The firm did very well and grew on. The India Shining Wave, that was, if you remember, 2004, almost 1990, this period, 97 to 2006 was called India Shining. When we had a Congress government which liberalized, then Manmohan and Narasimha Rao lost, then the UP, I think the coalition government came with Atal Bihari Vajpayee. Okay, Yashwant Sinha was FM for some time. That period was fantastic. Okay, so he used that opportunity. He rode that wave, and there was a rapid expansion in the automobile industry with new players coming in, Koreans coming in, a lot of this. So in 2016, the firm was converted into a public limited company. So when we are now, as we are now in presently 2020, when the story starts, Adekar industry was poised for growth and is in need of equity for expansion. So now you understand we are in prospectus topic. So we need money. Banks are very much happy about lending money, provided equity is infused. Equity means owners' funds, share capital. So possibly Vikram Adekar has reached the limit of his capability, financial capability. After all, see, he's a middle class guy who went to IIT, earned whatever little savings he had, he would have hawked, and then the profits from the business generated become the thing. Possibly he never took anything home. Please note it. The promoter Vikram Adekar would have taken a minimum salary and lived a slightly upper middle class life. That's about it. And he would have pumped all his money back into this business and make it grow. I can't zoom in this mode. I'll do one thing. I will go back to, and now I will zoom. Hopefully it's better now. Otherwise, just listen to me, Ji. And you also have it in the portal. So if you want to download it, you can. So, as we saw, in 2020, Adekar Industries was poised for growth. Now, what you may also want to do is keep a paper and pencil with you, pen with you. Some points are relevant. Make a note of them in your paper, numbers and all. Quickly. Because in the exam also, you might have to do that. When you're reading the question, you have to take notes, not copy the problem, notes. Some thoughts will come to your mind. Note it down. So that's how you do this. So around 2018, Vikram Adekar realized that he had reached the limit of his financial abilities and would now prefer to look for external investors. A few investment bankers, after studying the financials, agreed to invest in the business. But Vikram Adekar was worried about taking money from a few investors, meaning investors are like individuals. Or so now he doesn't want to get caught. So he prefers to go to a wider group. Especially he doesn't want to get caught with the QIBs. Because once the QIBs come, they put all sorts of conditions. First thing they do, they'll change the auditor. They'll want one of the big four to come. Or something, they keep playing around. The independence of the promoter will be continuously whittled down. Once you take money from the devil, now you'll have to play the devil's tune. And they will do all nonsense to do anything. And so they will put a director on the board, all sorts of nonsense they will do. Running the business will be very difficult after that. So this guy doesn't want to take completely from QIBs in a big way. So what he does, he possibly advised by a good auditor like you, he decides to go for a private placement. So as an initial step in October 2019, the board of directors of Adekar Industries Limited made a private placement offer. Not only to QIBs, but also to people like, see, the close friends of Vikram, relatives, friends, and also people who have, studied with him in IIT. See, this is something, when most people who studied with him in IIT would be working in some company earning salary and say for the so they see one of their classmates becoming a technocrat and an entrepreneur. So they say, hey, we are proud about this and let's give him some money. And whatever they have, maybe 50,000, a lakh or so. So this private placement offer was for 50 lakh shares. 50 lakh shares. Please make a note. 50 lakh shares of rupees 10 each. That means 5 crores. So the applications were received from the following people. What you need to now look at is, are there any exempted categories here? That's all. So friends and relatives of Vikram Adekar, 135 people, 27 lakh shares. Batchmates from IIT Madras, sort of separate category, though they would also strictly come in friends category, but still 55 of them have given him 11 lakhs shares. That translates to 1 crore, 10 lakhs. See the type of power. Because I'm sure many of these guys are big shots in big companies, earning well, disposable surplus. So they would have given him 5 lakhs, 10 lakhs, like that. Employees of Adekar Industries who are given ESOP, possibly they work so hard. So now he's giving them ESOP offer at a better price. And or he's giving it to them at 140 rupees. Hopefully, when the company does well, goes public, they will get a huge profit. So now they're getting it at 140. QIBs, that is qualified institutional buyers, 5 of them. Now, moving on, that was well received. Money came, the private placement offer was well received. Application money was received in full on 15th November 2019. Please note the date, 15th November 2019, all the application money was received. Shares were allotted on 11th January 2020. 11th January 2020. Date is important. The final results, please make a note of these 2 dates. 15 November 2019, money received. 11th January 2020, allotment. If you remember your last lecture, prospectus, you will remember why this is important. Financial results for the year ended 31st March 2020 were extremely good. And the company's valuation has been pegged between 210 and 260. So these guys get it at 150. Now, valuation in public issue is going to be 210 and 260. So the ESOP guys are going to be very lucky. They're going to get a huge bonus immediately when the company lists. Even if there is a lockdown period, when their valuation will go up now and portfolio size goes up, they can even sort of, later on they can sell it. Mr. Vikram Adekar is now confused. Should he prefer the lower end valuation, 210, and be sure of full subscription? Or should he go with 260, higher end? Take a risk of undersubscription. See, this is the dilemma. So what Vikram Adekar does, he follows his financial advisors and his trusted auditor and says, I will go for a prospectus which does not include quantum or price. Okay. Subsequently, a regular prospectus was filed. Based on this, allotments were made on 3rd May 2020. In the meantime, Sunrise Financial Holdings Limited, fictitious name, there is no such company in existence. In the meantime, Sunrise Financial Holdings Limited, one of the QIBs, who had been allotted shares in private placement, made a public offer of their holdings at a higher price. Please note, they had been allotted shares in private placement. Now they are going for a public offer at a higher price. The offer was made to the public and it was not in accordance with the provisions of section 26 as to content of prospectus. They simply wrote letters to the public saying, we got shares of Adekar Industries. You want to buy, come to us. We'll sell you, like that. Maybe at a discounted price from whatever. Now, this was circulated on 25th April 2020. This offer was well received. And the QIB sold all the shares allotted to it. This paragraph is important. As you're reading it, you should form your idea. Which part of company law is affected by this? What could be the situation like that? I want you to be thinking. I hope you're all listening to me. And I hope it's okay if I read it fully once before we go to the questions. Right? One of you confirm or 2 of you confirm. So things are fine. Mr. Rahul Adekar, who is the first son of Mr. Vikram's father's younger brother. Means Vikram's father's younger brother. That is cousin. Rahul Adekar is Vikram's cousin. See, that is the problem with cousins. They are always jealous. So this Rahul Adekar is feeling bad. See, this Vikram, he has become so successful. And that too, see, Vikram is a good man. He's not a fraudster. So this Rahul is getting angry. So he's trying to do something, some nonsense. So he says, in the prospectus filed at the time of public issue, it was claimed in that prospectus that Adekar Industries would be able to obtain a particular defense order for a quantity which was less than 2% of their total turnover. The directors honestly believed that getting the order was possible. However, the order was not granted. So they didn't get the order. But in the prospectus mentioned that company is also hopeful of getting defense order to the tune of some X amount. But that is less than 2% of the total turnover, and that never came. Now, Rahul says, hey, this was a misstatement in prospectus. You told a lie that you will get defense contract. You have not got it. I believed you. And whatever. Now, Mr. Rahul, it's mentioned in the prospectus now. Why you didn't get it? So Rahul wants to fight. Rahul wants to create a scene. So Rahul Adekar claims that this was a misstatement and that he was entitled to compensation from the directors. That's story. Huh? Let's see how this pans out in form of questions. Finally, in the prospectus issued by Adekar Industries, it had been stated that the money raised from the public issue would be utilized for developing new components for electric vehicles. See, they see in 2019, they see a huge opportunity for EV, which is yet to be actually. So as they go nearer, they realize, hey, EV possibly is not the way to go. So the company now gave proof. See, it has some technology, but now, rightly or wrongly, strategically, they feel that it's better to get into solar energy. So it is proposed to utilize a major chunk of the money raised through the public issue in developing solar energy. So they're going to use the funds for a purpose or object which is not stated in the prospectus. So with this, yeah, whatever answer we will see later. Now the questions are going to come. As the questions come, kindly give your esteemed answers, and then I will give my answer, which could be right or wrong, depends. Yeah, this is the first question. The private placement offer made by Adekar Industries shall be deemed to be a public offer. And part 1 of chapter 3 relating to content of prospectus. Now, so whether it will be, whether this private placement offer is valid or not. Basically, that is the question. So the real point is number. As you know, you can make an offer only to 200 people. 200. Okay, now I will answer Manav Agarwal's question. Manav is getting irritated. Asked a question. This man is not answering. Now I will answer because logically it comes to this. I know I'm going to come here. So this 200 persons is per offer. It is for a single offer, not for a year. So you can have any number of private. One thing is either that first, see, I make first offer to 200 people, named people. All of them agree. All of them send money. 200 over, kadam. Then you can go another 200 in the same year. No limit. Keep on doing it. Nobody can prevent you. There is no gap and all that. Nothing. But if that 200 itself have not responded and you got only from 50 or 60, then what you should do, you should first pass a resolution for abandoning that offer. And then and only then can you go for a fresh. In that, you can include people who have not responded in that. Nothing wrong. But this second offer should be done only after you have abandoned the first offer. Again, 200 you can. So this is the answer to you, Mr. Manav. Now, my friend Darshan says 1C. Absolutely correct. Why? His answer is absolutely correct. For that, you have to count. Meaning, that's why I said make note of numbers. So here we have this. Totally, we received 245 people. 245. Hey, that is more than 200. Huh? No. Check out. Certain people have to be removed. For example, employee stock option to be removed. QIB not to be considered. ESOP not to be considered. Employees being offered shares on ESOP not to be considered. QIB. So if you remove 55, 245 minus 55 or 135 plus 55, whatever you say, I get answer 190. I get answer 190. So which is less than 200. Therefore, as rightly pointed out by my good friend Mr. Darshan, C is the correct answer. Okay. Now, beauty in multiple choices, you don't get a chance to write your logic and all. You are either right or wrong. That is up to you. See, your question is, you're pointing out a possible lacuna in the law, which I will appreciate, Mr. Manav. But boss, believe me, even getting once is difficult. It's going to be very difficult. If that company is so good that I will use private placement in this way, I will as well go for a public issue. It is easier that way. If, as you say, it is so good, why private? See, who will go for private placement? Only a company which is doubtful, which is not well known. They will go, and their shares will not be subscribed. So practically it won't happen, Manav. But theoretically, as usual, if you are going to be saying this, I will agree with you. But practically it won't. There's a big difference between theory and practice. So practically, but theoretically, yes, what you're saying could happen. But what is wrong? Let him go. Boss, you have to go for 200. They will apply. Then on the same 200. I seriously, let him do. Whereas if I go for one public issue, I can get huge amount. Yeah. Okay. Seriously. Okay. The problem is many of you all are intermediate students. Maybe you're doing articles or not, I don't know. So once you come into the real financial world, practical world, you will realize many practical issues are there. Not just theoretically, we can talk 101 things. Practically, remember that Panditji, the Panditji who was trying to cross Ganga, the boatman, he was asking that boatman, poor boatman fellow, he is not studied, uneducated fellow. Okay, Ganga, they are crossing, huge Ganga. Somewhere in Prayagraj or Varanasi, they are crossing. Ganga is huge. It's almost, you can't see the other side. And so the Pandit, hey, have you studied Veda? No, Panditji, no Panditji. Your life gone, man. 1/4 gone, man. Sir, at least have you read Upanishads? No, Panditji, no Panditji. Hey, half your life gone, man. Huh? Then as they are nearing the middle of the river, Panditji is asking, at least have you read Purana? One day that fellow says, Panditji, I have not read, but I'm going to ask you one question now. Do you know swimming? Do you know swimming? Huh? Then Panditji says, no. Then so Panditji, your entire life is gone because there is going to be in the middle of Ganga, there will be a storm because it's huge. So there's going to be a huge storm now. Boat will collapse. I will swim and go. So this is the difference between theory and practice. Sorry, I'm not trying to, it's not about Manav here. It's to all of you. Theory, you can read a number of books, Veda, Upanishad. But when it comes to real life, you should know how to swim. Otherwise, it's going to be real difficult. Anyway, so today's Bhashan over. Let's continue. The allotment made on the basis of private placement offer is invalid because it has been made beyond 30 days of receipt of the application money. Is invalid because it has been made 15 days of receipt of application money. Is valid because it has been made within 60 days of receipt of application money. Is valid because it has been made within 90 days of receipt of application money. Which is correct? So the first, if you can't see A, that's okay. It's invalid because it has been made beyond 30 days. That's all. Let's see. Just don't forget to put 2C or whatever. Sorry. Yeah, 2C. 2C, Manav is right. Ritik is right. 2C. 2A, no. See, the allotment should be made within 60 days of receipt of application money. Which is where, if you read my slides fully and remember the slide, now many of these things you'll remember. Okay. So 2A is not the correct answer. 2D is not the correct answer. 2C is the correct answer. Okay. 2C is the correct answer. Beautiful. So happy. Now, this is too easy. When you see this type of question, you should say, Hallelujah. Blessed be the Lord. And immediately answer. Yes, 3D. Rajni ji, deemed prospectus, it is different. It is where an allotment is made and within 6 months, offer is made to the public. That is called deemed prospectus. Or the full money has not been received at the time when the offer is made. Either this or that. That is deemed. We'll be seeing deemed prospectus. That is also going to be covered in this case study. But what was issued by our friend Vikram Adekar at the time of public issue, because he was confused, 210, 260. So Vikram's need or Vikram's greed. Needy or greedy, whatever. So he said, let me not bother. Let me be Sthita Prajna. Let QIBs and those donkeys decide. So finally they got it. So that was called, so there was no particulars of quantum or price. So it is called red herring prospectus. See, this session, I also wanted to be a quick revision of prospectus. Okay. After that, we will start share capital engine. So this way you are, in a way, you are revising now. Now we come to your topic. Rajani ji, we are coming to your topic. Kya hai? The offer document circulated by Sunrise Financial Holdings Limited. Those are greedy fellows. The QIBs are greedy fellows. I tell you, they are greedy, unscrupulous fellows. Later on, when you become CFO, be careful with these buggers. You may go out with them to the bar, have drinks, convince them to do whatever you want, but don't trust those buggers. Even if you're a chartered accountant company, don't trust those buggers, especially the MBS. They will conveniently tell lie. Behind your back, they will work. Never trust those buggers. This is a practical advice given to you. Is it a deemed prospectus? What is that? MCQ 1 now? I don't know. 4, Manav says 4A, Ishan says 4C. Boss, deemed prospectus will be made by a person other than the company only, Baba. See, deemed prospectus concepts itself comes only after the allotment is made to somebody. So that fellow only will go. So that is 100% not the correct answer. Ishan, you got the point? C cannot be. B, the company had received the entire contract. True. But see, even if there are two conditions, even if one of them is satisfied, deemed prospectus. So one condition is not satisfied. That is, company has received the entire consideration. Correct. But other also you have to see. So 4A seems to be there, but some people feel 4C. Boss, deemed prospectus will be issued only by the issuing house or by the allotee, who will not be company. Other than the company only will issue deemed prospectus. You got it now? So C is not. Okay, thank you, Darshan. Okay. But to learn to swim, you have to be in the water. Theoretically, I cannot teach you. So I'm only giving you a hint as to when you actually jump into the water, what you should be ready to. A is the correct answer, 4A. Because you check out the date of offer. It was made within 6 months of allotment. If you want, I can show you. See, the April, correct. Allotment was made. Remember this allotment, 11th January. This fellow goes for a thing on 25th April. So 11th January, 25th April, less than 6 months. See, I'll tell you, case studies are actually fun. Once you know how to read the facts, see, you need to, please don't think multiple choice means you don't have to have knowledge. In fact, to answer multiple choice question, you need depth knowledge. Believe me, depth knowledge and absolute confidence in that subject. Only then you can come here. So many students think MCQ is easy. Baba, MCQ is easy for set. It is very difficult for setting. Your setting question so difficult. Correction very easy. You don't have to do. Machine will do. OCR will do. But student, it's not easy. A student who is not thorough in the subject, whether it is MCQ or written exam, he'll fare in the same way. Between two students who are equally thorough, guy who has good English knowledge and handwriting will prefer written exam, like me. He would prefer written exam. But if you give me MCQ, I'll go there also. But I would prefer written because there I have an edge. Whereas those who don't have good handwriting and those who cannot write well in English, they prefer MCQ because you don't have to write anything. But you are dangerous because later on when you come to real life, as I told you, you have to draft emails. You have to prepare a note for your MD. You have to summarize the meeting. So many situations where you have to write technical reports, where your knowledge of English and your ability to express technical subjects in simple English, it will be tested in the real world. At that time, if you say, no, sir, I studied only MCQ, then see, your MD cannot give you MCQ, yeah. He will say, please prepare a note. And last Friday, Saturday, one client told us on the tax, one year tax matter, it went right up to High Court, then VSBS. So complete subject, analyze and give me a note. So my manager prepared a note, I reviewed it and we sent it. It's part of the game. Clients expect you to do it. Managements expect you to do it. So if you do MCQ, see, if you're going to become an IAS officer, that's a different thing. MCQ. But remember, even for IAS officer, MCQ is only the beginning. That's called preliminary. After that, he'll be taken to task. Viva would be there. Group discussion. Written test also is there. Essay is there. They are tested. MCQ is only to screen good and bad. Once the preliminary is over, then only the real tough starts. Okay. The directors of in this Rahul Adekar matter now. Rahul Adekar is there, rascal. That fellow, he has no filed a case now. What do you say? Already Darshan gave a answer. Is it because the statement is immaterial? Or is there any other reason? See, boss, one thing, intention will never be known. So don't ever go there. If you say I have no intent, nobody is going to believe you. Intention, how to prove intent? Because in the prospectus, you have made a statement which is misleading or false. Rahulji says, maybe you have a chance with immaterial, but better still, remember Peak versus Gurney. Peak versus Gurney, what did we say? See, who can claim compensation? Who can claim compensation? Only a guy who relied on the prospectus. Only a guy who read the prospectus and based on that, he made the investment. Rahul is not in that category, Baba. He is in the earlier category. There was no prospectus when he invested. He invested of his own free will and accord, not based. See, he was not influenced by the statement in the prospectus. That was not the reason he made the investment. Therefore, he cannot claim compensation. Okay. So that is the correct answer. Not liable because Mr. Rahul Adekar did not subscribe to the shares based on the prospectus. Remember, he is a relative category who came in the private placement. So 5B is the correct answer. Okay. Though 5C is the correct answer. 5C is the correct answer. In case study, do we have to write answers? I don't know. Normally, if they ask you to write, but normally they won't ask. Why should they? The whole point of MCQ is easy to correct. So what do I do? What will I do with your reasoning? You are wrong, right? That's all. No reasoning. Now you want reasoning. Then you go for descriptive. Yeah. Why waste your time on MCQ? Correct. That is given to confuse you. Okay. So, Manav, if you still think that that D is the correct answer, welcome. I hate getting into arguments, not only with the students, with anybody. Reason, argument gets me nowhere. I am a teacher. I have explained the situation. I have shown why C is correct. Okay. Remember one more thing. Statement is immaterial is not a defense for civil liability. Darshan, are you able to understand? Statement is immaterial and intent to defraud also are good defenses for criminal liability. That is one more way I can try to convince you, Mr. Manav. But again, I assure you, intention, I had no intent to defraud. Sorry. That can never be a defense. Nobody will believe you. You try that stunt in, where you can try that? In income tax proceedings, yes. Concealment proceedings. You can say, fellow was honestly thinking this is the correct law. Whatever. But not in criminal proceedings for mistake. Your intentions, how will I know what is going on in your mind and all? Am I telepathy that I can read your mind? Intentions are never known. Actions are always known. So that's all. So one more thing, please understand, Manavji. and Darshanji, B and D are valid, could be. See, D is not valid at all. B could be a valid defense, but only for criminal liability. Whereas for this is a civil liability. Got it? So this is a good point. I mean, only when we discuss, we will understand. I'm not saying that. Okay, the utilization of the money raised on the public issue for an object other than that stated in the prospectus is not permitted. Is permitted if a special resolution is passed and dissenting shareholders are given an exit option. Is permitted provided the approval of central government is obtained. Oh, wow, that sounds nice. Is permitted if an ordinary resolution is passed and dissenting shareholders are given an exit option. Which one? Two B, 6B, 6BB. Ishan alone says 6A. Boss, it is permitted. It is permitted, very much permitted. Provided you pass a special resolution, and in case there are any shareholders who are dissenting, they have to be given an exit option. What is the correct answer? Okay. 6B is correct. Beautiful. I'm so happy that all of you got it right. Some people still think it's, see, it is a special resolution and not an ordinary resolution. Bhumika ji, it is a special resolution and not an ordinary resolution. That is the only difference between B and D. A, no, B is the correct answer. Now neither no central government. Today we are liberalized era. Central government doesn't care. So long as members are okay, everything is fine. Chalo. Now I have also given you other multiple choice questions. Quickly. These are not. One year from the date of registration, 1 year from the date of closing of first issue, 1 year from the date of opening of first issue, 90 days from the date on which a copy was delivered to ROC. Okay, 6 is over. Now we are going to part 2, which is unconnected with the case study. These questions have nothing to do with the case study. Listen to me, watch my lips. These questions have nothing to do with the case study. Case study ho gaya, over, bye. Ade karchi, bye. Now in a straight theory based MCQ. You know it, don't know it, don't know it. One year from the B is the correct answer. None of you has given B. 1 year from the date of closing of the, 1 year from the date of registration. 1 year. 1 year is correct. Okay. 1 year. 1 year is the correct answer. Vaishali Bindal is giving 6A. Again, madam, I explained why 6A is not correct. Now, criminal liability under section 34 in prospectus may be allowed. Criminal liability. The consent to become, see, 1 and 2 are for civil liability. 1 and 2 are for civil liability. 4 and 5 are for civil liability. No, 5 is civil liability. 1, 2 and 5 are civil liability. Whereas 3 and 4, misstatement was immaterial, had reasonable ground to believe in truth. This is what Manav is trying to argue. Intent. I honestly believed it to be true like that. Okay. So, 2, it is not 7, ma. Now the number count has changed. Again, we have come to 1, 2, 3. So, now tell for 2. A is the correct answer. 2A is the correct answer. 3, 4 and 5. See, 5 is not. only 3 and 4. 5 is not. 5 is for civil. Okay, if you still have doubt, no problem. Take my, I have uploaded my notes also. Assignment is also uploaded. Just check. Okay, that's what. Manav, sorry, you are right. That's what even I was having doubt. It's 1B. That is, sorry, 1C. 1 year from the, whatever is said in the notes is correct. I have to go back and check, which I will not check. And in notes, you gave no. In notes, what is given is the law. I am not creating the law. This is not fiction. This is non-fiction. I am giving you what is there in the Bar Act only. Nothing my own. Okay. So that is one problem with the teacher of company law. Nothing original. All are like this. Good. Question 3, she has gone. Wow. The minimum amount in a public issue shall be received within 30, 60, 90, 120. Sir, 2A, sir. 2A. 3A. 30 days. Okay. Alpha Century Software Limited made a public issue of debentures. The articles of the company authorizes the payment of underwriting commission at 2% of the issue price. The company has negotiated with the proposed underwriters and Mrs. Big Bull, again, other there's bigger frauds, these fellows, brokers, ultimate frauds. Your Harshad Mehta, Ketan Parekh, all of them are brokers, all potential criminals, every one of them. Fellow, never he can do the honesty. I'm sorry to say, from 1987, I know these guys. From 1989, I know these guys. I simply talk one thing, do something else. So you have to be very careful with them and you have to negotiate. So they have negotiated 2.25%. So which is correct? This is the last question. So if you can give me the answer, we can close and move on to 4. What is the law? What is the law? The law says for debentures, 2.5% or the rate mentioned in the articles, whichever is less. 2.5% or rate mentioned in that. These fellows are kept quiet, then 2.5, which means 2.25 is acceptable. But these fellows in the articles, they have put 2%. Knowingly, they have negotiated 2.2. Then they should have amended the articles and then entered into the contract. They should have amended the articles, made it 2.5 or 2.25, and then gone for a agreement with the underwriting agreement. Instead, what they are doing, they are keeping the articles at 2%. That means 2% is the correct answer, which is 4B. 4B is the correct. See, you are tempted to go to 2.5 because you learned that debentures ka 2.5, shares ka 5%. That is one level of mugging up. No, logic. Either that or what mentioned in the articles, whichever is less. So 4B is the correct answer. 2.25 negotiated rate is above the articles. Therefore, not valid. 2.5% or rate of articles, whichever is less. Kavita, Lamsalji. Okay. What is the answer for 1? Correct. Mayur. Answer for 1 is A. Answer for 1 is C. 1C. Because as Manav rightly pointed out, 1 year from the date of opening of first issue. On the shelf prospectus, you issue now and you open the issue in the prospectus. I even mentioned it in my lecture. there will be a date of opening. From that date, 1 year. So that is the answer. Fantastic. See. Also, I can see in a way, I can see, most of the time I find when people are wrong, their immediate reaction is to convince the other person that they are right, or to, argue, not argue, maybe argue is a big word, give logical reasoning why they are right. When you're a student, suggestion, get into learning mode. Yeah, see, I was wrong now. Immediately, Manav, I corrected myself, said, Baba, you are right, I'm wrong, sorry, bye. That's all matter. Simple. You learn, you grow. You argue, you don't grow. You learn, you grow. Okay, this is a small suggestion to you. Of course, all of you are very brilliant. Answer for 3 is not 90 days, it is 30 days. A, not C. Are you telling me or are you asking me? Okay, beautiful. Whatever it is. I thought I would just revise the topics for your convenience. And then we will move on to today's topic, which is share capital and debentures, which is the topic I am going to take up today. So, scheduled bank is in the Banking Regulation Act, there is a schedule. So all those banks which have been given a license by the Reserve Bank of India are mentioned in that schedule. So they are called scheduled banks. So it should be a licensed scheduled bank. Yeah. Okay. My suggestion, you check up from my notes only or Institute material. You will find it is 30, not 90. Okay. See, the last 4 are not based on case study. They are simply to test your memory, whether you remember. My memory is poor, but no problem. I am not going to write this exam. Already written. I have passed. I have also written a book. For writing a book, I can refer. But writing exam, no. So it is test for you, not for me. Okay. I can afford to be wrong. I can always say, sorry, okay. But you can't afford to be wrong in the exam hall. So better be thorough. For which, just to study with interest, you will remember. Memory comes with the interest. When you have interest, you will remember. Okay. Good show. So, good. Now, with this background, let us move on to share capital and debentures. So we saw prospectus, how funds are raised, etc., etc. Now allotment. Also we saw. Now that share capital has been created. So, yeah, thank you. That was the intention of giving you some kind of a revision. That's all. Now moving on to the next topic. Yeah, now that you are asking me, Mr. Mayur, I have these, whatever I discussed here now, I'm having it with me, but give me a little time. I'm now in a place called Coimbatore in Tamil Nadu. I have one more house here. I come and go. So I'm having some activities with which I'm a little busy. So not a bit night. By Monday, I will send the answers. By Monday, with my logic, with my reasoning, I will send you the answers. Yeah. But the case study has been shared. But the answers are also there. I will share. So now we move on to share capital and debentures. This again is divided into 2 parts. 43 to 70, sections 43 to 70. Share capital. One section, एक ही है, 71 debentures. Just like that, 42 alone. Like that here, 71 alone. अकेले. Single section, 71. Section 72 is part of this chapter, but not in your syllabus. Okay. This is a conceptual picture that I'm showing you. That is, instead of, I could have given some pictures and all that, but I just didn't have the time. So what I did, I took a cue card with my own handwriting. I wrote my point and I took a photograph, and that image I am now putting it here. Simple. You are already aware of sole proprietor and partnership. Remember the balance sheet of a sole proprietor. Balance sheet, liability side, upar wala. Proprietor's capital hai na, sole proprietor capital. That is not fixed now. That will keep on changing. The capital of a sole proprietor is nebulous, shapeless. Nebulous means changing shape frequently, constantly changing. So I have given this way of approach. This is how it will look now. So keep on changing. It's like an amoeba. It will keep on changing. There is no structure, right? So now when I come to partnership, the capital of a partnership is similar. It's also shapeless, except that is now cut into partners' capital. That nebulous capital is divided into partners, between partners. So each partner has a capital. A is capital, B is capital, C is capital, D is capital. They'll also keep changing depending on these drawings, depending on share of profit, etc., etc. All entries will be done, current account, etc. Sometimes in partnerships, what we do, we have fixed capital of partners, we fees. Then we have current accounts. But whatever it is, when you finally say what is the ownership stake of that guy, you have to combine both capital and current account and current account credit balances, or you have to net off current account debit balances. That is the amount he can finally take out. He's retiring from the partnership. That is the amount he's entitled to, right? So that shape will be very. Why am I making this point about shapelessness? Yes. When you come to company, the minute you say capital, the capital of a company is fixed. See the shape. See the thing I'm using. Of course, my lines are not straight, but imagine that these are straight lines. Straight lines. See that. Then you have a grid. With this grid, this fixed grid is divided into units of equal value. Each one of these small squares is of equal value. This is called a share. So a share is a share in the share capital of the company. So the share capital of the company is a defined number, 5 lakh shares. For Adekar private placement, 50 lakh shares, whatever. So the paid up capital of a company, even the authorized capital of a company, is a grid consisting of so many equal value units called shares. So 5 lakh shares mean 5 lakh units will be there. Each unit is there. Now you can buy 1 unit, you can buy 2 units, you can buy a whole chunk. Whatever you do, whenever you want, you can sell 1 share. So that is the convenience of company form of organization, where share capital is fixed and it is divided into shares of equal value. That is the definition. Now, with this background, you understand the definition. 2 subsection 84. We studied it in chapter 1. Share means a share in the share capital of a company. The small unit. This is called share. And includes stock. Stock, I already told you. If you remember, don't ask me again. Okay, once more. Stock is grouping together of shares, a bundle of shares, only for the purpose of trading in the market. Easy trading, that's all. No Indian company has issued stock. Okay, so I have answered your question. Please don't waste your time on stock. Leave it. Chhod dijiye. Please, leave it. In your own interest, I'm telling you. Leave it. Or else, this is what it is, stock. And a company has the power to convert its shares into stock and stocks into shares. So if you know this, it's more than enough. Now, shares, debentures, or any other interest of a member in a company. Because you see, when the company does not have share capital, then there will be an interest. That is also movable property. Movable property. Friends, in this chapter, we will also be talking about transfer of shares. Okay. Now, Keshav Thakur says consolidation of shares. Consolidation is different, Keshav. Don't confuse me. You be confused. That is your choice. Don't confuse me and other students. Consolidation is different. Where company is having more number of shares. Now, we consolidate, we take 10 shares and make them 1. That is not stock. That is simply 10 shares together will now become 1. 10 shares of rupees 10 each will now become 1 share of rupees 100. This is not stock. This is consolidation. Opposite of consolidation, subdivision. We'll be seeing that. When later on I'll be tracking. Subdivision. 10 shares will become, 1 share will become 10 shares. 1 share of rupees 10 each will become 10 shares of rupees 1 each. Infosys has done it. That is called subdivision. So don't confuse. Don't be confused. That is your problem. If you listen to my lectures carefully, I will try my best to remove your confusion. But if you still want to be confused, bye. So, shares, debentures, or any other interest of a member in a company to be movable property. Friends, this word movable property has a legal point. Because movable property can be transferred by mere delivery of possession. This watch, which I am now showing to you, is mine. Mine? What is mine? Nothing is mine. When I go, nothing I will take. But as of now, somehow I am allowed to say that this is mine. If I want to sell the watch, what I have to do? You give me cash, I'll give the watch. That's all. Bye watch. Hello shares. Hello money. That's all. That is how movable property is transferred. Movable property, ownership in movable property, title in movable property can be transferred or by mere transfer of possession. That's all. So, in the case of share certificates in physical form, the minute I give you the share certificate, you become the owner. But later on, when you come to transfer, we are going to talk about procedure. We are going to say that the transferee should inform the company. There's a separate form is there. That has to be SH form is there. That has to be filed. SHC form has to be filed. Why? Because remember, shares are movable property. Title can be transferred by mere transfer of possession. But please don't forget, share also, once you have a share in a company, you are a member. And as a member, you have a contract with the company with the other members now. Now, when you sell the share, you are going out of that contract now. That needs to be informed to the company. And that new guy is becoming now the shareholder, member now. He is going to enter into the contract, right? So both have to sign. Transferee has to sign, transferor has to sign. Transferor to say, I am getting out by. Transferee to say, hey, I am now the new guy. Please enter my name in the register of members. Because every person who applies in writing to become a member. So primary, original allotment, application form. Subsequently, when he buys, this form is there, by which he applies in writing, okay, to be admitted as to become a member, and whose name is entered in the register of members. This is the process of transfer of shares. But legally speaking, mere transfer of possession, movable property. Shares are movable property. This is a slightly legal point. Slightly legal point, just for your information, I'm telling you. Now, equity share means all share capital which is not preference share. Again, this company law, always negative definitions. You are asking, what is equity share? Fellow is telling, equity share means share capital which is not preference share. So immediately what you are going to ask, okay, what is preference share? Then preference share capital is that part of issued capital carrying preferential rights. Preferential means what? Better treatment will be given, or you will be given priority. See, go to Tirupati, Dharma Darshan is there. 300 rupee walas are there. Then suddenly break darshan. Early morning, 6:30, L1, L2, L3. Straight away they'll wait. Then chuck, these fellows will go. And straight away they'll go to Bhagavan. Straight, L1. Okay, like that. Then the 300 walas will come. Then finally, Dharma Darshan walas like me will come. So, Point is preferential treatment will be given. So preference share capital people have preferential right. For what? With respect to payment of dividend. Whenever dividend is declared, only after paying dividend to preference share capital, equity can take dividend. If you want to declare dividend for equity, first you have to give dividend to these guys. Usually that rate of dividend also will be a fixed rate. 12% non-convertible preference shares. Meaning, if you have profit in this year, first you have to pay dividend to the preference holder. First you pay the preference dividend. If anything is left over, then only equity will get. Otherwise, nothing for equity, only vertical lines. So nothing else. Going down, nothing. Okay. Another preferential, that is repayment of capital. At the time of winding up, in the event of winding up, the assets will be sold, no? Money will be collected. The liquidator will be there. Everybody will come. First is secured creditors, then government, like that. There are some preferential creditors. They will be paid. Then unsecured creditors, whole gang of them, they are also paid. Then something is left over that belongs to the members. First, before the equity gets, the preference will get. They have a preferential right to receive capital or repayment of capital in the event of winding up. So, preference, sir, don't use the word preference here. I'm going to ask you, dividend, is it a charge against profit? Dividend, self-dividend, forget preference equity. Dividend, is it a charge against profit? Can it be? No. You got profit after tax. After tax only, you're going to come out with the PAT. On that PAT only, you will calculate dividend. You will pay dividend now. Of course, you will calculate it as a percentage of the nominal value, no doubt. But you will pay dividend out of which amount? Post-tax profit only you will pay dividend. Whether preference or equity. So, since you have not put a question mark, I shall presume that this is a question. And answer, preference dividend is not a charge against profit. It is an appropriation of profit. Just like equity, Baba. What is the difference? Except that this guy gets a preferential. That's otherwise, it's not a charge against. This is why, see, sometimes when I'm doing some financial planning for companies, I will tell them, boss, instead of getting it as loan, it will become a deposit. No? Take it as preference capital. Because you want the money. He can't give a loan. You don't want to make him a director. All that I will tell you when I come to accept the deposits. So you want to avoid deposit rules. Then make him a preference shareholder. Then he can, as a preference shareholder, he can always come. No problem. But whatever dividend you pay to him cannot be deducted for income tax. It will not come in the P&L account. It will come only in the P&L appropriation. Okay. So, now, in case of a private company, Section 43 shall not apply where memorandum or articles of association of the private company so provides. This means a private company may, by its articles, state that the company may issue preference shares which will have preferential payment of dividend, but no preference as to repayment of capital in the case, like that. So, private company can create preference shares for which one preference will be there, other won't be there. Private company can do whatever it wants, provided memorandum so provides. If the memorandum is silent, articles are silent, then 43 will apply. Do you remember? We saw that when we said which will be superior. We said act will be superior to memorandum and memorandum to article. 43 says if your articles are saying 43 won't apply, then 43 won't apply. You do whatever you want. So 43 is one example. We saw it when we were talking about superiority of acts. Okay. Now there are basically two classes of capital, equity and preference. But equity itself divides into normal equity share capital with voting rights and equity share capital with differential rights as to dividend, voting or others. Equity capital with differential rights as to dividend, voting or others. What do you mean by differential rights? Try to wrap your mind around this. Normally, on a poll, I'm going to ask this as a question. I want you to give me an answer. On a poll, how will the votes be counted? On a poll, one man, one vote, or is there any other method of counting votes? On a poll, or on e-voting, or postal ballot. So each member will have how many votes? On a poll. Later on in management and administration, you will learn in detail, but I gave you some hint when we talked about total voting power and all. So on a poll, each member will have how many votes? Sir, on a poll, one share, one vote. Initially, show of hands, one man, one vote. But once the poll is demanded, one share, one vote. So Manav is correct, Varsha is correct. Darshan, Bhumika and Ishan have to reconsider their views. One share, one vote. On a poll, you remember total voting power, I told you now. Once a poll is demanded, then how many shares you got? 200. Then 200 votes. Please understand this. Okay. If you have not still understood it, no problem. Because in management and administration, it will be taught. But this is very fundamental point, which is important. Therefore, humble request is try to understand. Try to accept, then understand. Normally, one man, one vote democracy, all that nonsense. But in company form of organization, once a poll is demanded, or on postal ballot, or on e-voting, one share, one vote. Now you have understood? Now in differential voting right, this one share, one vote itself will be questioned. They will say, one share entitled to only half vote. One share entitled to only 1/4 vote. So if I'm having 100 shares, I'm not having 100 votes. I'm having only 25 votes. One share worth only 1/4 vote. So that is called differential voting rights. Unless you understand voting right, how you will understand differential? So on a poll only this will happen. You understand? Show of hands is very, very limited. Suppose there are only 10 members, all are attending. Simple meeting, show of hands will do. But the minute you go for large company, 1 lakh shareholders, you can't do show of hands. You can't count the hands here. What is this? Anatomical. And proxy cannot vote on show of hands. So poll will be demanded. Once the poll is demanded or poll is called for by the chairman, one share, one vote. Now in differential voting right, what happens? Even that one share, one vote, we will dilute it. We will say, if you want these shares, you will take one share, half a vote. Why they will do? You will ask me, why, sir? Why should I give him? Why should I take half a share, half a vote? Remember, if Ambani gives, will you not take? If Ratan Tata gives, will you not take? Because, boss, you want to go and vote in that meeting, or you want to enjoy the dividend and the capital appreciation. So here is a chance to get Reliance share. Otherwise, same. Everything else is same. For sometimes to sweeten the deal, they might also give you higher dividend. Meaning, it won't be a fixed rate. But what they will say, whatever dividend equity is getting, these DVR fellows will get 4% more. So I'm only giving one example. Hello, boss. I am giving only one example. How they will structure the differential voting rights. Tomorrow, when you become CFO, you can decide. But I'm giving one example. Don't think that is the only way. I'm giving one example. Yeah, they might not want to give away the controlling power. So they'll say, look here, I will give you a share, Baba. But one share, I can't give you one vote. I'll give you 1/4 vote. Are you okay? I will give you about what? Okay, then whatever dividend we are taking, you will get 2%. Sometimes they may not even do that. Why should Ratan Tata bother? Why should Ambani bother? You want share in my company? These are the terms. Take it or leave it. 100% people. But again, how many companies have gone for this? Has any company issued shares with differential rights? I searched and I got only Tata Motors and Pantaloon. Reliance has never gone for this. Reliance always gone for one share, one vote only. No DVR. Okay. Whereas Tata Motors and Pantaloon Retains, which is now Future Enterprises, issued DVRs with 1/10 voting right. Can you imagine? One share, 1/10. That means every 100 share, every 10 shares, one vote. Every 10 shares, one vote. 1 vote of 10 votes. Means if I'm holding 100 shares, I'll get only 10 votes. Voting rights as compared to ordinary shares in exchange for 5% higher dividend as compared to ordinary. So if ordinary shares are getting 30%, DVR fellows will get 35%. Okay. So there is one history I thought I will share with you, but rare. It is not as if every day this will be done. That's what. Darshan, I have answered your question on the screen. Can you see? In reality, yes, there have been companies like Tata and the Pantaloons have got, but rare. Because the Indian shareholders are also very smart, Indian investors. They say, go to hell. One minute, yeah, you are not the only company in the market. There are so many guys. I will go for some other company. I've been explaining now, DVRS means differential voting rights shares. Differential voting, okay, expansion. DVR, differential voting rights, shares. That's what we are discussing. Shares with differential rights as to dividend voting or otherwise. That is called dividend. Now, we come to the point. Okay, you want to issue differential voting rights. Shares with differential voting rights. Your company decides, we'll go. You are the CFO. So your MD is asking you, Mr. Mayur Gupta, we are planning to go for a DVR issue. What are there any legal issues? Can you please guide me? Can you send a note by, when can you send it? Can you send it by day after tomorrow, Thursday? He is asking very politely, because he is an IIT IIM guy, very politely he is asking you, but he's saying, brother, send it. So now, is a good question you are asking. Can DVR also be like 1 share equal to 2 votes? Jeevan Ji, answer, yes, it can be. But this, who will give you? See, again, do a reality check. Boss, you are the owner of the company. You are holding 60% stake in that company. You are holding 60. Now you are going to give me shares wherein I will get 2 votes per share. You will give me? Now, Jeevan Kishore Bhaskaran, touch your heart and answer me. Will you give me shares in your company in which if I invest 10 rupees, I will get 2 votes. 1 share, 2 votes. Whereas you will have only 1 vote, 1 share, 1 vote. Will you give Jeevan? That is the question. Honestly, you have to ask yourself. But theoretically, yes. Again, like Pandit Ji, you are answering. I am like boatman, I am replying. Theoretically, yes, it is possible. It's possible. But practically, you tell me, Baba. Who will do it? You tell me, will you do? You tell me, yes, sir. That means that you are a charitable minded person. You are not fit to run a commercial company. Bhumika says, never. Correct. See, brother, don't forget your basic economics. Human beings are always profit minded. No human being will take a deal which is losing. Unless if he is giving a losing deal, there must be something to compensate. So somewhere that balance should be there. Remember this. Nobody will take a losing deal. Nobody will take. Something will be there. See, even in relationships, it might seem as if one person is losing. Not really. What you are seeing is one aspect of the transaction. Maybe there is somewhere else he is gaining. So, I'm not only a chartered accountant. I don't know how many of you know. I'm also a MSc in psychology. I did my master's in psychology also. And I do corporate training and HR also. So as a psychologist also I've noticed that no human being, will take a losing deal. In which case, if somebody is taking a losing deal, apparently, I will go as a psychologist. What is the hidden benefit there? Yeah. Something hidden benefit is there. Otherwise, this fellow will not go around giving. Okay. Now Darshan is coming to my point. He will give 2 votes, but with a reduced dividend. But even then, Jeevan said no. Darshan, you do the math, you will understand. Control will go, yeah. Okay, what is dividend? I'll give him. Whereas it's better to control is the issue here. Somebody told correctly. 1 second. Jeevan, you only have told. They will not want to give away the controlling power. One more thing, Manav makes a very valid point. He says, I think such high voting rights are only given to promoters. Correct. Before the shares are given to the public, You can give yourself such shares. One share carrying 2 votes. You can. Nothing prevents. But remember, once you do stunt like that, immediately your public issue will bomb. Because people will say, hey, this company, what, yeah? The promoters are having 1 share, 2 votes. I'm having only 1 share, 1 vote. No, something wrong with this guy. So, whichever side you look at it now, don't do all that. See, even normal DVR with reduced voting, nobody is preferring. No company is going. If you're going for higher and all. But if at all, practically, you are asking me, yes, if you can get away with it, before you go for public issue or private placement, allot yourself shares with higher differential rate. And then go to the other guys and convince them, hey, I will be having 1 share, 2 votes, but you guys will have only 1 share, 1 vote. If you want, give me the money. Which means your company should be doing so well and the potential should be so high that people will fall at your feet and take your share, even if you are having one is for 1 share, 2 votes, and they are not getting that. Reverse now. See, Ratan Tata or Biani says, take it. I'll give you 1 share, but 1/10. Why they take? Because Tata is a big company. Same logic. Okay. Very good. So now we had a practical discussion. I don't know. Maybe one of you tomorrow might come across a practical situation where your MD will say, can we do it this way? I don't know. Test it out in the real life there. But theoretically, yes, it can be. Varsha Shetty, you want to say something or just put a thing? Okay. Now, remember, in the exam, they might ask you a question on this. We can say, what are the conditions for issue of equity shares with differential rights? First condition, there should be an authorization in the articles. Second condition, this DVR issue should be authorized by an ordinary resolution. In case it is a listed company, it is not enough if it is an ordinary resolution. The ordinary resolution should be passed through postal ballot so that every shareholder has the right to vote. See, in a physical meeting, shareholders may not be able to come. Even if they appoint proxy, it's going to be very difficult. Therefore, postal ballot is better. Aram se sitting at home, where say you will do it. You simply do everything and put it in the post. So, postal ballot should be so that if they don't want, they can refuse. Remember, this is not going to be passed by the new guys. This is going to be passed by the existing guys. The existing shareholders should give their consent by auto resolution to the DVR shares. Now, voting power of Mayur Gupta gives a real world example of Taparia, where maximum shares, their share price is around 10 per share, but issue dividend of no. This is, I don't think this is the DVR example. Is it the DVR example? No. This is a good company. I don't know what you are trying to say, but I don't think Taparia is a DVR. Is it a DVR share where 1 share carries 2 votes or something like that? I don't think so. Anyway. Size is very important, madam. The Tukda companies cannot go for DVR. You will see why, because many conditions are there. Tukda companies cannot go for DVR. If they go, they won't. See, no big deal. You can go. Nobody is preventing you. But I've never heard. Boss, we are only having 2 or 3 examples of DVR. So, maybe Tapare, see that way there are many companies which are too good, which are financially powerful companies, where the promoters are quietly sitting without advertising. Okay, now, this you should understand this math also. Voting power of all shares with differential rights not to exceed 74% of total voting power. Now, remember your definition of total voting power. If all the votes on a poll are exercised, if all the votes which can be cast on a poll are exercised, the total number of votes which can be cast is called the total voting power. If all the votes, so if a company has 2 lakh shares, 1 share carrying 1 vote, then the total voting power is 2 lakhs. Because on a poll, how many votes? 2 lakh votes can be cast. That is called total voting power. Now, when differential voting rates are issued, remember, the total voting power will be calculated with the differential voting rate calculation. We'll see that in one example, you will understand. See, there is a number of shares 1 lakh. Voting right, normal equity share, 1 vote per share. Number of votes, 1 lakh. No problem. Voting power of equity shareholders with DVR, total voting power, 2 lakh. No problem. No problem. Now, 2 lakh DVR shares are issued. 1 vote for 2 shares. That is half vote per share. So for every 2 shares, 1 vote. So 2 lakh shares will translate to 1 lakh votes. Already 1 lakh votes, right? So together 2 lakhs. Total voting power for along with DVR. Normal 1 lakh, DVR 1 lakh, total 2 lakh. Out of that, the total voting power of shares with DVR is 1 lakh. This is 50%, which is not exceeding 74% of the total voting power. So this suppose you issue differential voting rights, if you issue huge amount, 6 lakhs, then this will become 1.5 lakhs. I'm sorry, 3 lakhs. Then what happens? Total is 4. This is 3. I'm giving an example. Instead of issuing 2 lakh DVR shares, you're getting greedy. You issue 6 lakh DVR shares. Now that 6 lakhs DVR share, the number of votes will be 1 for every 2. Now, so 6, you'll have 3 lakh. 3 lakhs. Am I correct? Now, that means this will become 3 plus 1, 4. Whereas this will be 3. So 3 by 4, 75% exceeds 74%. Not allowed. Okay. So this math you might want to understand. Have you understood this rule? Voting power of all shares with differential rights not to exceed 70%. For example, I'm just giving an example. Suppose I make this 6 lakhs. This will be okay. 3 lakhs na. This will become total na. 3, 1 lakh normal, 3 lakh DVR. This will become 4. Now this will become 3. The voting power of DVR shares. Now this will become 3 by 4, which is 75. Have you understood? Not allowed. Voting power of all shares differential rights not to exceed 74, whereas this is exceeding 74. See, it's so convenient to issue DVR shares because you get more money by giving lesser control. But they want to put a ceiling on it and say, hey, you can't go, that can't go beyond 75% of total voting power. Okay. Fantastic. I'm so happy that, it's really for a teacher, getting brilliant students like you is also a great benefit. Okay. Students who are able to immediately grasp. Acharya Padamadarte. Acharya Padamadarte. Padam Sishya Swamede. 1/4 of your learning only comes from this donkey. The rest of it is Shishya Swamedeya, 1/4. Padam Sabbrahmacharibihi. It comes from the poor students. See, when somebody was asking whether it is charge against profit, immediately somebody replied, no, it's an appropriation. Padam Sabbrahmacharibihi. Padam Kalakramayana. It won't happen. See, the minute you complete your intermediate, nothing will happen. The minute you complete final, you will definitely be knowledgeable as compared to, say, ordinary human beings. But in the profession, remember, there are people who have spent 10 years, 15 years, 25 years, 35 years. My father, 45 years. So, Kalakramayana. Acharya Padamadate. Padam Sishya Swamedeya. Padam Sabbrahmacharibihi. Padam Kalakramayana. It will happen with time. So give that time also. Okay, now, no default in filing financial statements and annual returns for 3 immediately preceding financial years. So for 3 years, you should not have made a default. Okay, correctly you should be filing. So also no subsisting default. Subsisting means at the time when you are going for DVR. At that time, okay, at that time, there should not be any default. That is called subsisting default. Subsisting means at the time when you are going for DVR, there should be no default in payment of declared dividend. See, dividend is, you will be seeing it later on. It is the board of directors who decide. Shareholders cannot demand as a right. But once declared, the dividend should be paid within 30 days. We'll see it later. So that should be paid. There should be no default. No default in repayment of matured deposits, redemption of debentures, redemption of preference shares, and interest on debentures and deposits. There should be no default in any of this. Also, no default in payment of preference dividend. So you can't issue DVR shares and not pay preference dividend. Which means what? Only a company which has made good profits, paying full preference dividend can go. Also, repayment of term loan with interest thereon to any public financial institution, state level financial institution, scheduled bank. So, if there is any term loan, that repayment, there should be no default. But see, 5, if there is a default, you cannot go for DVR. But if the default is made good, then you can go immediately. The minute you pay, the minute you repay the maturity, whatever you finish it, you can immediately go. But here, where there is a default, even if the default is made good, even if it is default made good, you cannot issue DVR for 5 years. You can issue DVR only upon expiry of 5 years from the end of the financial year when the default was made good. Are you able to see the difference between 5 and 6? 5, once the default is made good, immediately you can go. Whereas here, you can go only upon expiry of 5 years from the end of financial year, right? Now, my dear friends, the time is almost 7:25 or something like that. No, I'll complete this one. The company has not been penalized by court or tribunal. Okay, that's a nice one. Hopefully, I have not destroyed it. But sometimes the teacher has to destroy the ego of the student to develop it. Sorry. Sometimes the teacher has to destroy the ego. On the destruction of the ego, the student will become developed. So there, the student will think the teacher is destroying me. No, the teacher is not destroying you. The teacher is destroying the ego within you. Once the ego is destroyed, you will become more brilliant. So that with that one rider, I will agree with you. So some teachers have the capability. My guru had. If he is hurting me, it was always for my good. Of course, he never hurt me unreasonably. But when he did hurt me, when he was tough with me, it was to make me better. No doubt about it. Okay, the company has not been penalized by court or tribunal during the last years. The RBI Act, SEBI Act, SCRA, FEMA, or any other special. So there should be no penalty by a court or tribunal during the last 3 years. Now, I'll come to Jeevan's point. The company shall not convert its existing equity capital into equity share capital, carrying differential obligation. That is, if you have existing equity share capital on which there is no DVR, that cannot be converted into DVR. Please, if you have existing equity, you cannot convert. Holders of equity shares to DVR shall enjoy all other rights, such as bonus rights, everything they are entitled, except they won't have full vote. That's all. Other than that, everything they are enjoying. The register of members shall contain all relevant particulars of equity shares with differential rights. Okay, so now I'm going to give a small break for about 5 minutes, max 10. Okay, the break begins now. Sir, shall we have a Welcome back from a slightly long break due to a certain calls that I got that I needed to take. It was nice of you to bear. I hope you also had a good break. Let us see. Any questions have come in the meantime? Yeah. Can we say, like, issue of DVR will indirectly saying that their company is very disciplined? Exactly. That's a good way of putting it. Though, even, yeah, when the minutes a company is going for a DVR, they have to be above reproach. Fantastic company. Very disciplined. And they are not taking things for granted, which poses good image. Correct. Absolutely correct. I'm with you. The way you have put it is definitely strange, but by and large, it communicates the meaning. And I think you're right. Which is why, which are the two companies which have gone for DVR? Tata and Vianney. Vianney was also, Kishore, see, Pantaloons was also very disciplined company. So, good. Now, we move on to the next topic, which is share certificate. Friends, physical share certificates may be issued under the common seal. So if the company has common seal, that common seal may be affixed on the share certificate. But it is optional. Today, common seal is not mandatory. If the company has a common seal, it can be affixed on that. Affixed means, as I told you now, normally rubber stamp, you'll put chop. It will be imprinted. That ink will be transferred to the paper. That is called stamping. Whereas common seal affixation is embossing, where the paper will be pressed and whatever is there in that stamp, that common seal now, will get embossed. From the paper slightly, it will be raised. It will be very nice. If you see some of the old share certificates, it will be good. I wish, the depositories, they should. No. Today it will end by 8:30 only because I have some guests who are coming for dinner to my Coimbatore house and I need to meet. So don't worry. But don't worry. We will, if necessary, I may extend also. No problem. So, as I told you, share being movable property. In case common seal is not there, then the certificate should be signed by 2 directors. In case the company has a company secretary, 1 director and company secretary. The ultimate bakra, he has to sign. Okay. Now, every share in a company shall be distinguished by distinctive number. Physical share. Every physical share will have a distinctive number. So, one share certificate will have, say, 10 shares, meaning so-and-so number to so-and-so number, distinctively. Boss, I have done physical share certificate reconciliation, yeah. When company goes for public, they'll call us. That's a separate assignment. Completely, we will audit the register of members and do it. If necessary, there may be some corrections also. Then we'll hold a board meeting. Then the board will authorize the correction. Fresh certificate will be issued. Only then we can go to the merchant banker. Because the first thing the merchant banker will do, he will come and see everything thoroughly. But today, it doesn't matter. Because even if you have physical shares, they should be dematerialized. Once it is dematerialized, it is a digital record. The computer will find out where it is. There is no need for distinctive number and all. Okay? There is no distinctive number. See, though currency notes have number, we don't bother. The currency notes have a number for control for RBI purpose only. But you and I don't bother about those numbers. Have you ever noted that? Numbers can be noted sometimes for identity purposes. But once I deposit the money in the bank, suppose I deposit 10,000 rupees in the bank, thereafter distinctive number, no. It's all 10,000 rupees, that's all. It is an electronic record in the bank records, electronic record in the bank's computer. So 10,000 rupees. So if Srikanth says, give me 10,000, they have to give. Which 10,000 all, they need not give them. So that is called dematerialization, conversion into digital form, holding the share in digital form. Okay, sorry. Thanks for informing me, my dear friend. One second. Now I think it is all right. Thank you for pointing out, my dear friend, that I am not sharing the screen. No problem. You didn't miss much. You did not miss much. We were just talking about share certificate, dematerialization, etc. So entry in the records of a depository. Entry in the records of a depository is prima facie proof of ownership for dematerialization. So if you are holding dematted shares, so this will be nothing but your entry in your DP statement. That's all. You will be, see, you will open an account with a depository participant. That depository participant will maintain your account now. Whenever you want like a bank statement, you will get a DP statement. See, unlike bank, see, in bank statement, you will have only one set. That is Indian currency ka in, out, in, out, in, out. Whereas in your DP statement, if you are holding 40 shares, then each share will have one folio. And for each share, there will be opening balance bought during the period or credited during the period, like bonus and all, and then sold or bought back net. So you'll have. So that statement is good enough. Physical share certificate shall be in the form SH1 or as near thereto as possible. Duplicate share certificates may be issued where the original has been lost, destroyed, defaced, whatever. But the original, if it is available, should be surrendered to the company. Which, when it is not lost or destroyed, it cannot be. But if it is defaced, mutilated, or torn, that's to be given back. The original shall be surrendered by the company to the company. So this issue of share certificates is a big process in that. You see, all that is now gone with dematerialization. Earlier, when it's always duplicate share certificate, the company will make all fuss. They will say, give me an indemnity bond, affidavit, and then all sorts of nonsense they will tell. And this company secretary will tell all nonsense. Normally, only they will tell nonsense. This will be special nonsense they will tell. Do this, do that. They won't believe. Okay. So, share certificate. In case duplicate share certificates are issued with intent to defraud, already I am having one certificate, they are issuing duplicate to somebody. With intent to defraud, then fine. Minimum 5 times for the company. 5 times the face value of the shares. Maximum 10 times the face value, whichever is higher. Normally you will find whichever is lower. Here they say whichever is higher. Officer, you remember good old 447? Section 447, where public interest is involved, 10 years imprisonment, straight. 10 times and 6 years imprisonment. 6 months to, I think, 10 years. I don't remember. I hope you remember. Only teacher who has the guts to tell this, na? I don't remember. Because why should I remember? Yeah? If I go to that slide, I will see and tell. Because when my client is asking, sometimes client will ask me questions in company law. I'll say, wait a minute, I will open this, your PowerPoint only, the one that I use for your classes. Then I will come to that slide and say, now you ask the question. So in front of me, that section will be there, I will answer it. Why? Because, for my memory loss, my client should not suffer, yeah. My client should get the best advice. So I keep the book open. Sometimes in income tax, they will come to consult me. I'll tell them, wait a minute. Then I'll call my manager and he will, in my room, there will be one big screen. In that screen, the income tax act section will come and where act and all come. So then only I'll start. He says, sir, you don't know the section. I don't know the section, man. If I know the section by heart, how it will benefit you? Don't worry. I know the concept of this section. I know the concept of this section enough to advise you. Okay. And I will tell you the best advice ever. By applying this section, remembering that, why should I waste money? This concept is going to become very popular. Over a period of time, your income tax exam may even become open book exam. It may also become open book exam. You are saying I am not audible. Let us see. Now am I audible? Okay. Keshav Thakur, come nearer to the mic. I had a recent test for my ear. I had a problem. So now, after testing me, the ENT has told 50% hearing impairment here, 40% in the right ear. I'm able to hear what people are telling, but I'm theoretically deaf. I'm theoretically deaf, but practically I'm able to hear. I don't know what is. Theory and practice seems to be the theme of today's, underlying theme of today's lecture. Huh? What is theoretical? What is practically possible? Anyway. Okay, dematerialization. We will discuss dematerialization today in detail. You remember I told you that I will teach you dematerialization in detail, which is what is going to happen. Dematerialization or demat is the conversion of securities. Security means, you saw the definition, no? Mainly shares and debentures, whatever. Especially shares, mainly shares, from physical certificates to electronic records. I gave you the history also. The Depositories Act was passed in 1996. At that time, there was a lot of resistance. I don't know why. A lot of resistance. People like prefer, physical share certificates. They want to see it, touch it, feel it. But NSE, the National Stock Exchange, which had just been formed at that time, took a lot of effort to popularize this. Then finally, SEBI, 92 SEBI, so finally SEBI put its foot down and said, look here, if you want to sell that share in the market, stock market, then it should be in dematerialized form. That's all. Because what happened was, NSE came out with the advanced digital trading platform. Very quickly, 2002, it was very active, online trading. Followed suit with BSE. BSE also came out with a fantastic online trading platform. So these two guys became the winners. The rest of the regional stock exchanges folded. They tried one stunt. Finally, they said Inter-Regional Stock Exchange of India or something like that. But that never came through because obviously they could not come to terms. So finally, the regional stock exchanges have no more. What you have is only two giants. Like, that transformers. Two big giants are moving around. One is National Stock Exchange. The other is Bombay Stock Exchange. So both of them are interested in dematerialization because once shares are digitally traded, it is better if you can also give delivery in digital. See, Aajto, what happens? I have an account with a depository participant. See, this whole thing works like this. We created two depositories. They are government-sponsored bodies. NSDL, National Securities Depositories Limited, and CDSL, that is Central Depository Services Limited, CDSL. These are the only two depositories today. So these are the only two depositories. Now you can't go and directly give your shares to the depositories. No. Instead, they have created agents. So these two depositories have agents, DPs, depository participant. Could be anybody, it could be an NBFC, it could be your own broker. For example, my broker is my DP. I deal through a company called Nuvama. My broker is called Nuvama. Earlier, they were called Edelweiss. Before that, they were called Anagram. So, in fact, some newly joined employee of that company, he'll come and waste my time. I'll tell him, look here, do you know what was the original name of your company? I know, sir, Edelweiss. No. Before that, what was the name? Before that, sir, I was a customer at that time, like that I used to say. Okay, so you don't educate me on the market. You do what I say. You are my broker. See, I go to Mumbai, get on from the flight, go outside, get into the taxi. Well, I ask the taxi driver where to go. Hey, he's my taxi driver. I will tell him, go to Chembur or go to Nariman Point. Wherever I want to go, you go, yeah. Okay, you are the brokers like that. If I say buy, sell. Anybody taking investment advice from broker is like you are asking the taxi driver where to go, yeah. Don't ever. Brokers have no knowledge. They only see the daily movement. They are Kupamanduha to the core. They are the ultimate frog in the well. They don't know anything about the bigger picture, about companies, good, bad, and nothing. If you ask him, yes, sir, you can buy Dubakar Limited, sir. It's going up. That's all he knows. It's going up, you buy. Going down, stop buy. These are the fellows who create market collapses. They will, the minute it starts going down, they'll start selling. The positions they will try to recover with whatever little profit or even small loss, they'll come out. That is when they will slide the market. All these market slides are created by these broker wallahs. That is why intelligent investors will simply keep quiet and watch. Nothing will happen in 1 day or 2 days. The recovery will happen. Nothing will happen in 1 or 2 days. In 1 or 2 days, no panic is needed. No euphoria, no panic. Just wait and watch. Okay, coming to the point. Depository participant could be a bank, could be your broker, could be. So you will open an account with a DP. That is called DP account. That DP account, they will take KYC and all that. That becomes very important. That account will have an attached bank account. It will have an attached your email ID, mobile phone, and it will be linked to PAN, Aadhaar. Everything. Okay, you are locked. Okay, Big Brother will be watching you. So once you open a DP account, remember your transactions are visible to the government. Yes, sir, you know what, sir? I have not declared all my share transactions. One fellow will come and tell. You don't declare, you think nobody will know, yeah? Government will know. You will get a letter, don't worry. In 1.5 years' time, you will get a letter asking what happened to all that sale of shares. So, I don't know, sir. I'm not aware is the correct answer. NSDL, CDSL, are they traded? I don't know, sir. I can check out and tell you, but to my knowledge, no. But I'm not aware is the correct answer I can give you. Okay. They come under the government. See, mainly these NSDL and CDSL, the shareholders will be either Government of India or along with RBI, etc., etc. Okay. Ministry, they will all be there. Yeah, Zerodha is there, Grow. All of them will have DP, obviously. So that makes sense for him to have. Now, why? He's going to be your broker as well, DP. So one thing that they will do to attract you for intraday trading is they'll say, sir, we'll give you DP account without charges for 1 month. Like that, no, that's all nonsense they will tell. Okay. Now, they in turn have authorized banks, NBFCs, etc. to act as depository partners. So this is how it is. So you will, when you buy a share through your broker, you will instruct him to credit a depository account. He will, in that, when you have a, see, DP account alag hai, broking account hai. That is different. See, with Zerodha, you will have two relationships. One could be Zerodha broking account, where you will buy and sell. That is your broking account. Plus, if you are using Zerodha's DP, then DP. No, you are using some other DP, Bank DP, State Bank of India DP, then that. So when you become Zerodha customer, he will ask you, which is your DP account? So you will tell him SBA, give all the details, then he will go and lock it. He may also ask you for power of attorney, POA. I have given to my, because what is the big deal? Otherwise, every time I have to give a depository advice, DP advice. Every time I sell a share, for giving delivery, I have to sign. Instead, I have given them POA. So whenever I sell, automatically from my account, they will transfer it to the buyer's account. Whenever I buy, it's no problem. That broker will transfer it or they will transfer it to my account. It happens so easily. Sale of shares so easy. Purchase of shares is so easy. You buy today, it will be reflected in an account that evening. You sell today, it will be reflected in an account that evening. So simple. If it is there in your pool account or if it is there in your account, straight away he'll take it and put it there. Okay. So I'll tell you, you will not be able to understand the way I have, and I can appreciate Demat. Kyonki, I was an investor in this market in 1986, 87, 85 to 92. Then Arshad Mehta scam. Then due to many reasons, I quit the market. I didn't come to the market at all. Simply, I didn't enter the market. I invested in mutual funds and properties and all, and I never came near the share market. I escaped Harshad Mehta by skin of my teeth. I escaped. That's a different story. Then I never came. Till 2002, I never came. So, Ketan Parekh also, I escaped. Both these criminals, I escaped. Your good old Harshad Mehta and Ketan Parekh, I escaped. Okay. So, You have noticed one thing, both these guys are from Gujarat. Both these guys are from Gujarat. Nothing against Gujarat. See, Gujarat is such a mixed bag. Great people also from Gujarat. Criminals also from Gujarat. I don't know if this guy is from Gujarat. I think Ambanis are from Gujarat. If I remember right. I think so. Ambanis are from Gujarat. And Adanis are also. I don't know. Honestly, I don't know. And of course, our enlightened Prime Minister is from Gujarat. Sardar Vallabhbhai Patel. Why? The father of our nation is from Gujarat. So we get good things also from Gujarat. We get criminals like Ketan Parekh and Harshad Mehta also from Gujarat. So really funny state, nice state. I have traveled extensively in Gujarat, right up from east to west I have gone. Nice state, very well developed. Okay, so NSDL is, except that in Gir Forest, no lion was willing to come and show its face to me. Maybe they didn't like me. Nirav Modi also from Gujarat. Bringing shame on the Modi name. Huh? On the one hand, we have a great man called Modi, on the other hand, you have this Nirav Modi. So, having said that, NSDL is National Securities Depository Limited. CDSL is Central Depository Services India Limited. You can see the logos also I put there for your benefit. With the age of virtual and online transactions and the introduction of the Depositories Act 1996, securities no longer need to be in physical form. They can be registered. See, since I've been there from 1980s right up to date, then from 2002, I really got into the market. And in 2002, the Ketan Parekh bloodbath, Reliance was quoting at 90 rupees, 150 rupees. I just picked it up. You won't believe it. L&T, Reliance, all these companies were going at a bargain price. Then only I invested my entire funds into that at that price. And then kept quiet whenever market goes on. Again in 2007, market went high. I saw it's not going to handle something wrong. So 2007, I was sitting in Kodaikanal in May. I was there for a week for my holiday. Every day, I had given a list to my secretary. All she has to do is, I will tell her, the list is there. I will only give you one number. Number of shares to sell today. That's all. So I will tell company name, number. Company name, number. Don't bother about the price. Sell it. Whatever price, sell it. Because the market is high. Whatever may be the price, you sell it. Like that, I sold up to 1 crore rupees I sold. And then that's how I built my T Nagar building in Chennai. Market collapsed 2008. You remember that? That so-called global financial meltdown. Market collapsed. Again, I entered the market in 2012. Bargain basement, bottoms. I entered the market. I bought again. Now waiting for the next peak. Okay. Now, again, pandemic gave me an opportunity, little bit. Then again, now waiting for the peak. Now we are on the journey to the peak. Okay. It will happen sometime in 26, 27. So don't think that I'm predicting. Merely my view I'm telling. I may be wrong. So it will go up. It will keep on going. Optimism. You'll go. People will go mad. All Tobacco Limited. If a company has the name Tobacco Limited, that company can also go for an IPO. I'm not joking. Fraud Unlimited company will go. That will also give money now. Because market will be so buoyant and optimistic. People will be wanting to invest in the market somehow. Small cap, mid cap, no cap, all cap they will put. In the next 2 years, you are going to see the tamasha. That is when you should get into employment also. Seriously, there will be so many companies, need for chartered accountants, huge demand. They will be willing to pay atrocious salaries to you. If you complete your final before 24, 25, you are lucky guys. Because that 2 years, it will be a glorious financial time. When chartered accountants will be demand. I'm not joking. So pray to God that you will. Okay, Mayur Gupta mentioned Satyam. This word Satyam will be coming again and again in my lectures, especially when you come to accounts and auditors. I will talk about Satyam. But right now, let me make one point from an investment perspective. Satyam was a good company, profitable company. Believe me, what Raju did was he boosted the profit. If the profit is 2x, this fellow made it 8x. Whereas the 2x profit is a good profit. I purchased it at a low price. And it went up by this fellow. When it went to an atrocious peak, 2007 peak, I sold it and I came out. So that when the actual Satyam collapse came, I was not there. I escaped. Okay. Whereas those donkeys who were there at that time, greedy donkeys, they got into trouble. Sorry to say this. Okay. Okay. So I'm sorry if I'm wasting your time, but some thoughts, since you are getting right into the core of stock market and you're going to learn the law relating to shares, definitely a little bit about the markets. If you know, your understanding will be better. So now the Depositories Act made it compulsory for shares in listed companies to be in fungible form. Fungible means in dematerialized or in digital form, fungible digital. But some shareholders still wanted to hold physical securities and gloat over them. Means they want to see it. Like, some people, they'll keep currency note and keep on looking at it. Gold ingots and keep on like that. Must be. But finally, SEBI has directed, after 1/4/2019, listed companies will not accept transfer requests for shares held in physical form. Earlier, listed companies were accepting. So, but market, you cannot give good delivery. You have to dematerialize it, only then you can give delivery. But companies were willing to accept transfer of shares in physical form. But after 1/4/2019, no. Never. Only dematerialized. So compulsorily dematerialized. You have to get it. Compulsorily dematerialized. Yeah, Darshan wants to be there. But for that, you should learn more. Okay, don't worry. You will get it. But very calm. You should assimilate a lot and learn. And never be in a hurry. Never have ego. If you have ego, you can never become a value investor. Because egoistic people, they will only create, when the market is going up, they will talk with ego. They will say, Mr. Srikanth, you don't know anything. Market is going to go up further like that. That egoistic fellow will talk. I will be simply smiling and selling my share and coming. Then when the market is bottom line, these egoistic fellows will come and tell me, Mr. Srikanth, there is no scope in share markets, sir. Don't invest your money. Like that, they will tell. So ego, first you should destroy. Okay? Destroy the ego. And be sthita prajna. Be equilibrium. Then suddenly you will find you are able to make the right decisions. Practice that. It comes with time. Control the mind. Control your mind. Then automatically the words will be controlled. Thoughts will be controlled. Then the words will be controlled. Then you can talk freely and you can write beautifully. Language will come to you. Saraswati will bless you. For all that, you have to first control the mind. What happened with the physical? That's a good question. See, as per the Depositories Act, the physical shares should be destroyed. The physical shares which are surrendered now should be destroyed. But many shares are so beautiful now. Shipping, what is that? What shipping was that? Calcutta-based company. Beautiful share certificate. I had the physical certificate. It used to be in such a big certificate, foldable. It will be in beautiful certificates are there. Looking so beautiful in those days. Early certificate. Chowgule Shipping. Chowgule Shipping Limited. I had that. Chowgule. Beautiful share. I used to simply look at those share certificates. But in those days, no mobile camera and all. I have not taken photograph. But so what they will do, instead of fully destroying it, they will punch holes in it. So that it will be clear that, it is out. Now today, even if you have physical shares, nothing you can do. You can only frame and put it in it. But to my knowledge, the company, absolutely. If you want shares, first you have to surrender your physical shares. Then the company will convert and they will inform the depository. You should open a DP account. Inform the company. Then company will credit the DP account. Then this physical shares they will get technically, according to SEBI, should be so destroyed. But instead, what you can do, instead of destroying it, you can deface it or punch it and give it back or keep it. But my humble suggestion is the government of India, especially SEBI, should collect all these old certificates and have an exhibition or even a museum. It will be a fantastic history of Indian financial markets. Darshan, this question is out of syllabus question. I will not answer that question. I have gained my knowledge from wherever I gained it. Not answer. If I start answering that now, I'll be doing injustice to other students who have come to learn company law from me. Correct now. So let us see. I think you have located my LinkedIn or something or Facebook, and you have sent a friend request, I think, if I'm not wrong. So maybe there we will see what anything can be done. You send a message like that. I will try to explain. Okay. The promoters of every public company making offer of convertible securities may hold such securities only in demat. You remember we saw this even earlier in prospectus. So the entire holding of the convertible securities held by the promoters in physical form shall be converted into demat before you can go for that issue. So every unlisted public company shall issue the securities only in demat form and facilitate dematerialization. But this rule has not been made mandatory. Unlisted public companies still have physical certificate, but they have an option to convert into dematerialized. Okay, this is unlisted public company can have dematerialized, but it's very costly. We have a few clients who are unlisted, but who have dematerialized. Many startups have dematerialized, but for that you have to pay. See, there will be a guy called share transfer agent. You have to hire him. All sorts of nonsense. So it's an additional cost. If you're willing to bear it, yes. Every holder of securities of an unlisted company who intends to transfer shall get it dematerialized. All this they have given, but as of now, it is not compulsory. Okay, not compulsory. They have given all this. As of now, nobody is enforcing it. But if at all they go public, it will be, then they should facilitate dematerialization. We are moving on to voting rights of shareholders. Section 47. We already saw this. Enough I have told you. On a poll, voting right of a shareholder is in proportion to the value of paid up capital held by him. This one sentence I will tell you in simple form. On poll, one share, one vote. That's all. This is what I have been teaching you. You have also now learnt it well, I hope, on a poll. So later on, when you go to management and administration, faculty will teach you poll. Remember, what is a poll, she will tell or he will tell, how the poll is taken, blah, blah. But remember, once the poll is demanded, then voting pattern will change. No more one man, one vote, or one person, one vote. One share, one vote, in proportion to the value of paid up capital held by them. Thus, corporate democracy works on the proportion in total value and not the usual one man, one vote in conventional democracy. Okay. Now, I'm not against conventional democracy, but boss, man who has put more money should have more say now. That's absolutely correct. This is justified because higher the stake, greater the risk. Therefore, greater should be the voting rights. Absolutely right. I agree with this view. I hope you agree too. Basically, I am pure capitalist as against American capitalism, which is exploitative capitalism. Okay, I'm not supporting American capitalism. It is exploitative capitalism. Whereas I am a pure capitalist. Adam Smith, okay, Ayn Rand, okay, that's a totally different thing. That is the capitalism that Bhagavan speaks in Bhagavad Gita. Yajnaharte, where everything is done as yajna, where we do our best. But once you do your best, you are entitled to the best. So, unto each as to his performance, unto each as to his risk, unto each as to his capacity, not as to his need. That is unfortunate. So that way, I can never get into communism because I'm a pure capitalist. I believe that each man should be given the opportunity and freedom to do what he or she should want. And once they do well, they should be entitled to earn more and more. Okay? And there should not be any control on them saying you shouldn't do this. Socialism, give to the poor people. See, governments are taking money from the taxpayer and giving 1,000 rupees every month. You do charity with your money, I say, not with my taxpayer money. How much we have struggled to earn it. And then we paid the tax to you, GST, income tax. For you to give freebie, for somebody who goes and gets drunk every day, for that family, we will give 1,000 rupees. That is not fair. Sorry. This is my view. Nothing to do with company law. So I support totally capitalism because, yes, Ambani took a risk. Dhirubhai took a risk. And for that risk, he should be rewarded. Of course, I am not supporting other activities of Ambani and Adani. I'm only saying where risk is there, the man should have more stake. Okay. Sometimes even in India, we have exploitative or crony capitalism is there, etc. Of course, during the earlier era, it was absolute exploitative capitalism, where Birlas and Tatas, they had Goenkas, they had everything. They got the rights to do anything. At least today, man like Dhirubhai Ambani had the chance. Accountant in a petrol pump in Sharjah had the ability to create an empire. That is the real democracy, according to me. Okay. Every shareholder has a right to vote on every resolution. Preference shareholders have a right to vote on the following resolutions. See, normally, equity shareholders can vote on every resolution. Preference shareholders can vote only on resolutions affecting their rights, or resolution for winding up, or repayment or reduction of equity or preference. Suppose you are going for reduction of capital. We'll be seeing it in this topic only. When you go for reduction of capital, at that meeting, preference share capital holders also can come, because when you reduce the equity liability, he is also affected now. So, preference shareholders can vote on these three. Plus, they can vote on all resolutions where the dividend on such class of preference shares remains unpaid for 2 years or more. Where a dividend remains unpaid for 2 years or more, then you can't prevent him from attending. All resolutions, he will also come and vote. He becomes entitled. Why? Because we didn't pay the dividend. 2 years company running at a loss. We are not paying him dividend. We are also not taking. He will also get a right to vote on all resolutions. Okay. Correct. In those days when printing was done, it was all very costly. Very, very costly. Believe me, printing cost. Today, that entire printing industry has gone down because of this. Because of digitalization, dematerialization, printing industry has come down. It's not what it was. Okay. Nowadays, we don't read books. Means nobody reads books anyway, but we don't physically read books. We prefer to use Kindle. I'm a voracious reader. I'll confess to you. In a month, I read 7 to 8 books. Okay. But nowadays, at least 3 of those books are on Kindle. Okay. So that printing has also come down. Good. I'm a bookmania. I have collected almost 23,000 books, which is in the second floor of my T Nagar building. Anytime you are in Chennai, you are welcome to come and have a look. Okay. Some of them are management books, psychology books, classics, fiction, of course, a lot of fiction books. Okay. Section 47 does not apply to a private company, provided there is no default in filing financial statement and annual returns. So, private companies can be innovative in structuring voting rights. They can have their own voting rights. Generally, private companies are allowed to manage themselves. The law doesn't want to interfere with them. But this exemption to the private company will be available only if there is no default in filing financial statements and annual returns with registrar. What is that? Jasprit, come again. How did particulars on physical were changed when share norm was changed? What is that? Norm. Share? Not able to understand your question, Jasprit ji. Now, where share capital of the company is divided into different classes of shares, the rights attached to a particular class of shares may be varied. This can be done with the consent in writing of not less than 3/4 of the members of that class by means of a special resolution passed at a separate meeting of the holders of the issued shares of that class. Remember, you cannot convert ordinary equity shares into differential voting right shares. Other than that, you do anything you want. Okay. But you cannot convert existing equity shares into DVR shares because that is prohibited under that section. Other than that, you can vary. When you want to vary the rights attached to a particular class of shares, you can do so only with the consent in writing of not less than 3/4 of the members of that class. Means 3/4 should sign a document which says, I agree. Or by means of a special resolution passed at a separate meeting of the holders of the issued shares. I'll give a simple example. Preference shareholders are entitled to 12% dividend. Now you may want to vary that. And you may say they will now be entitled to only 10%. That resolution can be done only with the consent in writing of not less than 3/4. Suppose 3/4 of the preference shareholders agree, no problem. Suppose you have only 3 preference shareholders in all 3 of them sign, no problem, or 2 sign, over. Or you have to call a meeting of the preference shareholders. And at that meeting, they should pass a special resolution. Okay. Again, I repeat for the benefit of clarification, you can't convert existing equity shareholder shares into DVR shares. Variation of shareholders' rights requires provision to that effect in MOA. So first you have to amend articles and say company has the right to vary. Memorandum capital clause also should be altered to include the right to vary. Normally, nowadays, when I am drafting memorandum, automatically I'll put with the right to alter, vary, consolidate, subdivide, convert into stocks, and convert stocks into shares and shares. Everything I'll put. So that's already there in the. In the absence of such variation, not prohibited by the terms of issue. At the time of issue, if you have said not possible to vary, then no. That's why equity shares you cannot convert into DVR. If the proposed variation would affect the rights of another class of shares, written consent of 3/4 of such other class of shareholders shall also be. Okay, so this is something that you might want to remember. So in case there are some dissenting shareholders of your class who don't want the variation, then holders of not less than 10% of the issued shares of a class who did not consent to such a variation or did not vote in favor of the special resolution may apply to the tribunal within 21 days to have the variation cancelled. If the tribunal is satisfied that it is unreasonable, they will cancel. But they may not say, no, go ahead. So variation shall not take effect unless and until confirmed by tribunal. Order of tribunal on any application to be binding on the shareholders. If the tribunal says, no, what the company is doing is right, in case you guys are not happy, go to hell. So that's it, binding. No more appeal. Now the company shall, within 30 days of date of the order of the tribunal, file a copy with the registrar. Okay, so this is we are here. Next class, we will start with calls and all that and move on to premium, bonus, discount, bonus, all sorts of exciting topics are there ahead of us. I'm looking forward to sharing this knowledge with you. Let's see what Jasprit is saying. Existing means issued or authorized. Sir, existing means authorized. Then issued. So authorized. Existing, authorized. You already issued equity shares without differential voting rights. Authorized cap, not issued. At those times when you purchase or sold the shares physically and with physical shares, how particulars of share certificate was changed when share number was changed? No. Each certificate had distinctive numbers that cannot be changed. So when I buy, I will buy one certificate in the 10 shares or 100 shares, distinctive numbers that cannot be changed. If I want to change it, what I will do, suppose I have one share certificate, 100 shares. Now I want to have 10 certificates with 10 shares each. I will have to send this certificate to the company with an application. Then the company will print fresh certificate. Okay, wherein they'll put A, B, C, D up to J. So each of those will have 10 each. That I can then go and do. So those days, all this was there. Nowadays, Demat, enjoy. One share you can transfer. Just one share you can buy. No problem. Enjoy dematerialization. Okay, good. So it was a great evening as usual, and hope you enjoyed the session as much as I did. Let's hope to learn more on Thursday. Bye.